5 a.m. in New York City. Good morning. I'm Danny Berger with your Bloomberg Brief. Here's what you need to know on this Tuesday. Rally on, stocks extend their rebound after the biggest advance since May. Strong earnings fuel those gains. Palantir sales boosted by an astonishing AI impact. And President Trump vows for a substantial tariff increase on Indian exports to the U.S. Well, the rally continues on for a second day. Erase from your memory the drama of Friday, because now we are less than 1% away from all-time highs yet again. So this morning, a little bit stronger, up 0.1%. NASDAQ outperforms thanks to some Palantir earnings. Valerie will get to that in just a moment. Russell 2000 also doing strongly. Now, for this bond market, a huge rally on Friday, another rally on Monday. It eases a little bit on this Tuesday. We're up by at least 2 basis points on your 2 and 10-year yield. Your 30-year yield up just under 2 basis points. We're now pricing in 90% odds that we will get a cut in September. Mary Daly, speaking to Reuters, a non-voting member, but does say that we could see it appropriate to have more than 2 cuts this year. Let's get to those stocks, though, on the move, including Palantir this morning. With that is Valerie. Hey, Val.
Hey, Danny, good morning. Yeah, let's start right there with Palantir. This is the software company that's leveraged to the defense space, come out with some great earnings with a revenue up 48% from the previous quarter. And Palantir, those stocks are rising around 5%. They also raised their guidance, Danny, with the company saying that the astonishing impact of AI is really giving a boost to its bottom line. Now, this company, the CEO saying they want to be the software company of the future, and investors seem to like what they heard in those results. Palantir powering that stock rally further. Let's go to the pharmaceutical space. This one's kind of a negative picture. Hims & Hers, the telehealth company that sells mostly weight loss drugs, out with some disappointing figures, especially when it came to their sales of GLP-1s. We're seeing that stock sink 13% in the pre-market. They've been trying to broaden out their range of offerings to their customers, and this comes after a messy breakup with Novo Nordisk that saw the Dutch pharma giant accusing Hims & Hers of deceptive promotion and selling illegal knockoff weight loss drugs. Let's end with the oil majors. We did have some results overseas. BMP rising some 2.3%. This comes after the company returned to profit for the first time in a very long time, and the new chairman announcing a big review of its business, and it's trying to cut costs. Investors seem to be liking the promise of the turnaround plan to come. Over to Saudi Aramco, we're trading up just 0.5%. This company posted the 10th consecutive quarter of declining profits. Danny, this comes as lower oil prices weigh on the Saudi giant's bottom line.
Valerie, thank you very much for those stocks to look out for. We'll catch up with you later in the hour to see how they develop. Also this hour, in just moments, we'll be speaking to Andrew Sheets of Morgan Stanley. Later in the hour, Stephanie Roth of Wolfe Research. Let's turn back to markets, though. Investors are still watching for further signs of tariff impact on economic data. Andrew Sheets of Morgan Stanley writes, with data set to look more like stagflation and credit no longer under July's protection, we think it makes sense to add small tail hedges over August to September. I'm pleased to say that Andrew joins us now. He's global head of corporate credit research at Morgan Stanley. So, Andrew, add hedges, but just how concerned are you that we might see some ruptures in this credit market?
Yeah, thanks. Good morning, Danny. So look, I think we are heading into a really interesting and frankly more difficult period for the data. On Morgan Stanley's economic forecasts, the next couple of months are going to see inflation tick up and growth tick down, growth continue to decelerate. And, we think that puts the Fed in a difficult position. As you mentioned at the top of the show, even though markets are pricing roughly a 90% chance of a September cut, we still think it's more likely that they do not cut in September, given that inflation path. And so, this is a mix that's difficult anyway, but it's also, I think, different from what we've seen year to date. For all of the tariff headlines and noise, actually the inflation data has generally been coming down. The growth data has generally been okay. But the next couple of months, I think, are going to look different and more challenging.
Well, we saw Treasuries rally hard, at least for getting concerns about the growth side of what you're talking about, Andrew. But when it comes to credit, I mean, man, it ticked up, but from a 2007 tightness for credit spreads. That feels more like a technicality. What do you make so far of a continued resilience in the market and for risk broadly?
Yeah, so credit has a lot of things going for it. You have still quite good corporate fundamentals. You could argue that The ratings trajectory of the corporate market in the U.S. or Europe is on a better trajectory than the sovereign markets, than the government markets. Corporates are issuing less on a relative basis than governments are. That's good news. And these yield levels, which are, historically elevated in the U.S. versus the last 20 years, historically elevated in Europe versus the last 20 years, these are what's driving demand. It's people buying the bonds for the yield, not the spread. So I think those are all fair points and reasons the market has been resilient. July is also historically just a phenomenal month for credit returns. It's the best month of any month for investment grade and high yield. But I think as we go forward, you are looking at spreads that are pricing in a lot of good news. You're looking at a different mix of economic data that we have not yet kind of had to go through. And as you mentioned, yields declining. I mean, in small amounts, that's okay. But if yields keep declining on, say, a weaker job number, the type of job number that could get the Fed to cut, in our view, well, that could be worse for credit demand, which has been so yield focused.
Andrew, what about some of the individual sectors? Because at least this earnings season, we have learned that tech looks very strong. The banks look very strong. But I'm just looking at what we got from consumer discretionary so far. Of those that have reported, about 50% of discretionary and staples have seen falling profits. In those types of sectors, Andrew, are you expecting more stress as potentially the consumer feels more of that inflationary impact if it is coming later this year?
Well, Danny, I think that's such an important point because this is a market of many. You have real diverse and dispersed performance under the hood, and that's true in the equity market, and that's true in the credit market as well. And I think importantly, while financials are a big part of the credit market, technology is not. Technology is a very small sector in U.S., European, Asia credit. And so that sector's strong performance, its secular performance as AI continues to be built out, it's not much of a help in terms of relative credit performance. If anything, it might mean more issuance into our market. And then you mentioned the consumers, and yes, you have seen kind of more mixed results in the second quarter, but it's actually next quarter, the third quarter, where we think that performance looks even more challenging because it's in the third quarter where we think the tariff impact is going to be fully loaded. It's in the third quarter where these companies have generally already sold out of their pre-tariff inventory. They're not going to have as much of that low-cost inventory. And so they either need to raise prices, which is a challenge, or they need to eat into margins, which is a challenge. And so we do think that third quarter for earnings season in some of these sectors that are more consumer-facing is going to be more difficult. Well,
the interesting thing is it's not just the U.S., it's not just dollar-denominated debt, Andrew, that looks quite richly priced. If you look at the Euro Ag, for example, last Thursday before the ruptures on Friday, they were at their tightest spread since 2018. Are you also expecting that impact to go global when some of the tariff impact starts to filter through?
Yeah, so I do think it would be kind of reasonable that if, even though I think it's the U.S. that has this more challenging mix of data, ironically in Europe, our economists increased their growth forecast for this year by 1/10. And we think the inflation path in Europe is going to be coming down this year, even as the U.S. inflation path kind of sees this temporary uptick. But these are markets that most of the time are correlated, most of the time have a connection. If you are seeing, I think, a more challenging mix out of the U.S., I think that can affect other markets. So, I think this is something that could cause some modest widening in Europe as well. Again, not something we're focused on is I think trying to position for smaller types of hedges, smaller types of moves rather than larger moves. And I think it could also drive some decompression, some weakness in the weaker parts of the market, say the single B part of the market in European high yield, where, again, I think you have less cover from those strong credit fundamentals and more sensitivity if global growth, undershoots and is a little bit weaker.
All right, so maybe the rotation out of America continues. Andrew, thank you so much for joining this morning. Really great to catch up. Andrew Sheets of Morgan Stanley. Now let's get you some other top stories that are trending on the terminal this morning. Washington is working with the chips industry to monitor the flow of semiconductors to China. The aim, prevent smuggling and ensure American tech remains dominant. Director of the White House Office of Science and Tech Policy spoke to Bloomberg earlier.
There is discussion around very important research and development that needs to be done on potentially the types of software or even physical changes you could make to the chips themselves to do better location tracking. And that's something that we're exploring and we explicitly included in the plan.
TSMC is beginning legal proceedings after discovering a potential leak of advanced chip-making techniques. It said in a statement that it conducted an internal investigation and identified the issue early. Nikkei also reporting that TSMC fired several employees suspected of attempting to obtain critical information on a chip's development. Elsewhere, SoftBank is stocking up stakes in chip makers as its chief Masayoshi Son focuses on AI tools and hardwares. Regulatory filings show that the Japanese investor raised its stake in Nvidia to about $3 billion by the end of March, also buying $330 million worth of TSMC shares and $170 million in Oracle. Coming up, Texas Governor Abbott fights back his response to state Democrat lawmakers who left to block a controversial vote. We'll have more on those actions coming up next on your brief.
The tool they're using is a racist, gerrymandered map. A map that seeks to use racial lines to divide hard-working communities who have spent decades building up their power and strengthening their voices. And Governor Abbott is doing this in submission to Donald Trump.
To those who are absent, return now. Show the courage to face the issues you were elected to solve. Come back and fulfill your duty, because this House will not sit quietly while you obstruct the work of the people. The people of Texas are watching, and so is the nation. And if you choose to continue down this road, you should know there will be consequences.
Texas Governor Greg Abbott has ordered the arrest of Democratic lawmakers who left the state to block the vote for a new redistricting plan, writing in a statement, quote, Texas House Democrats abandoned their duty to Texans. I ordered the Texas Department of Public Safety to locate, arrest, and return to the House chamber any member who has abandoned their duty to Texans. Joining us now is Bloomberg's Suzanne Lynch. Suzanne, I don't even understand how you can arrest someone for just leaving the state, but what exactly is at stake here?
Yes, as we've heard, the governor of Texas has issued these civil arrest warrants, effectively accusing Democratic lawmakers who were elected to the state legislature in Texas of abandoning their elected office and absconding. Now, legal experts doubt that these civil arrest warrants are enforceable beyond state lines. So they may, for example, face fines at some point. But look, this definitely ups the ante, and I think it's part of a shift in political focus now ahead of next year's midterm elections. These are the big elections on the horizon for Donald Trump, for the Republican Party, where the public at large and voters in places like Texas will give their verdict on the Trump presidency and Republican control of House of Congress in Washington. And this issue around Texas and representation had been going on some time. Donald Trump himself had urged Texas to implement this redistricting, which Democrats are branding as gerrymandering, in order to bolster Republican control of that state, and in particular try and get control of 5 seats in the Texas legislature.
And that would certainly make a difference for midterms. Suzanne, elsewhere in Washington, D.C., the Wall Street Journal has this report that the White House is prepping an order that would punish banks who discriminate against conservatives. It harkens back to 2023 in the UK when Nigel Farage was debanked. Not really an American issue typically, Suzanne. What does the reporting suggest?
Yes, the Wall Street Journal is not naming specific banks here, but they're saying that as soon as this week, although plans could change, we could have an order from the US administration directing banks not to essentially drop or change terms or conditions for customers based on their political beliefs. As you say that, there is a precedent. This was a huge story in the UK. And just last year, NatWest, the owner of that private bank, reached a settlement with Nigel Farage. He's the very high-profile leader of reform and a big advocate of Brexit and a friend of Donald Trump. He had raised issue with the bank, the small private bank, that it had dropped him because of his political beliefs. Now, this did end up in that settlement, A, but B, the resignation of the chief executive of NatWest. And that was quite an unusual development here in Europe. It now looks like something similar could be brewing in the United States. As we say, no specific bank mentioned, although there have been reports lately of a specific case involving Bank of America and a group that was had activity in Uganda. But as we say, action could be coming on this. But again, a kind of an interesting politicization of banking customer, that relationship between customer and bank that this article is suggesting.
Yeah, I was going to say, Suzanne, 2005, the start of this year at Davos, Trump had that awkward moment with Brian Moynihan of Bank of America where he said, start opening up your bank to conservatives. To your point, so maybe they're under the microscope. Suzanne, thank you very much for that. We'll catch up with you later in the hour. Bloomberg's Suzanne Lynch. Now, meanwhile, President Trump said that he would be substantially raising the tariff on Indian exports to the U.S. over India's purchases of Russian oil. India's Ministry of External Affairs says the nation will take all necessary measures, adding that, quote, the targeting of India is unjustified and unreasonable. Joining us now is Bloomberg's Brendan Murray, who leads our global trade coverage. Brendan, it's interesting because it seems most nations have been caving to Donald Trump. It seems that, like what's playing out in India, is different this time.
Yeah, definitely. This is a real showdown between two leaders who just a couple months ago would have expressed admiration for each other. But now they've been through these trade negotiations for the past 2 or 3 months. If you remember, President Trump said that India was at the front of the pack. They were going to get a deal, even though India has a reputation for being very difficult to negotiate trade agreements with. President Trump gave them good odds of getting one. But here we are less than 48 hours away from the deadline when these new tariffs kick in, and the two sides couldn't be farther apart.
It is, as you say, a few days, 2 to be exact, until tariffs kick in. Brendan, what's happening with Switzerland? Because there seems to be a desire from the Swiss side to negotiate tariffs after getting a 39% tariff rate, much higher than it was on the reciprocal tariff day, on Liberation Day, rather.
Yeah, exactly. Switzerland's another one to watch really closely here over the next day or two to see if they can come back to the White House with some sort of offer that will turn Donald Trump's mind around. We've reported there was a difficult phone call late last week. Trump said no deal. Turned the Swiss away and said, come up with a better one. In the meantime, the clock is ticking on these tariffs, these 39% tariffs. They're going to really hit the Swiss economy hard and damage the relationship. So we'll see if the Swiss officials can come up with something that they can announce, that they can agree to, that will change Trump's mind. But at the moment, they don't have much time left, and the differences seem pretty broad, too broad to close over the next day or two.
Well, it's India, it's Switzerland, it's Canada. It's probably other nations too, Brendan. How much does the White House seem willing to negotiate at this point? Or how much are they communicating that the tariff rates are the tariff rates?
They're pretty much saying we're in implementation phase. The customs agency released a notice late last night. Companies in the U.S. that have to pay these tariffs are waking up this morning, reading through 1,500 words of new directives from the customs agency about how they can apply these country-by-country tariffs and product-by-product tariffs. So it's a bit of a bureaucratic mess that companies are having to scramble to try to understand. There's all sorts of definitions in there that still aren't clear. So when these tariffs kick in, you can expect some disruption as companies try to figure out what their new costs are to import goods from overseas. 12:01 a.m. on Thursday, New York time. That's when they kick in. The White House has confirmed. Brendan, thank you so much for your coverage. Bloomberg's Brendan Murray. Coming up, Defense Secretary Pete Hegseth's top aide versus a White House senior liaison. That story and what else is in the front pages and making headlines across papers this morning. That's coming up next. You're
watching Bloomberg Brief. I'm Danny Berger in New York. Let's take a look at what the front pages have this morning. The top publications. First up, the Wall Street Journal. They are leading with an exclusive on how the White House is looking to issue an executive order that would punish banks which discriminate against conservatives and crypto companies. Lenders found in violation may face fines. Next up, the Washington Post is running with this one. The Defense Secretary Hegseth's acting chief of staff tried to oust a senior White House liaison to the Pentagon. Unnamed sources told the Post that the dispute took place last week, marking the latest incident of infighting among administration staff. And finally, on the front page of the Financial Times, the OECD warning that weak business investment is threatening global growth. It says corporate spending in most advanced economies is failing to return to historic trends after the financial crisis and the pandemic. Coming up, speaking of trends, we are going to try to make sense of this labor market. We're going to catch up with Stephanie Roth on why she believes that economic data can still be trusted despite all that drama. That's next on Bloomberg. It's 5:30 a.m. in New York City. Good morning. I'm Danny Berger with your Bloomberg Brief. Here's what you need to know. Rally on, stocks expend their rebound after the biggest advance since May. Strong earnings fuel those gains. Palantir sales boosted by an astonishing AI impact. And President Trump vows for a substantial tariff increase on Indian exports to the U.S. So we stabilize and we bounce back, reversing major losses as this market prices in more Fed cuts. Tech led the way yesterday. It slightly does so again today after strong earnings from Palantir. We are back to under 1% away from all-time highs. Now, for this bond market, it's been 2 days of a rally after a stunning front-end rally on Friday. But we are up by about 2.5 basis points for your 2-year yield, 10-year yield up by more than 1 basis point at 421 flat. It is now a market that's pricing in 90% odds that we get a cut in September. Let's look at some of the stocks moving underneath the hood. With that is Valerie Teitel. Hey, Val.
Good morning, Danny. Let's start with Palantir, because who cares about weak payrolls when you have the AI trade rolling on? Palantir showing a 48% rise in its sales, with the company saying that AI is having an astonishing impact on its bottom line. Pre-market, it's up 5.3%. The CEO saying in the call after earnings yesterday that they want to be the software company for the future. It seems like investors like what they hear on that noise. Let's keep in the AI space and go on to some licensing pack news. We have heard news that AMD, the chipmaker AMD, is entering a licensing agreement with Arteris. We're seeing those shares of Arteris jump nearly 60%. Arteris is a provider of semiconductor system IP for accelerating system-on-chip creation. That sounds pretty cool, Danny. I think I know why AMD wanted to lap it up. Let's move on to the pharmaceutical space. We Hims and Hers. This is the telehealth company that sells mostly weight loss drugs, falling some 12% in pre-market trade after its sales of those GLP-1s came in quite weak, and this is despite the company trying to broaden out its offerings to its customers, and comes after basically the big falling out with Novo Nordisk over their agreement in terms of the Dutch company calling them in some way telling their customers or misleading their customers on selling GLP-1s. Danny.
Valerie, thank you very much for that. Now, elsewhere, San Francisco Fed President Mary Daly said that the central bank may need to do more than 2 rate cuts, telling Reuters that the FOMC should be prepared to, quote, do more if the labor market looks to be entering that period of weakness, and we still haven't seen spillovers to inflation. Joining us now, I'm pleased to say, Stephanie Roth, chief economist at Wolfe Research. Stephanie, really great to see you. I'm glad we've had the weekend to decompress after Friday. But we were speaking on Friday right after that labor market data. I'd say you were much more measured than the kind of like collective freak out we all seem to have. Now that we've put it behind us, has your view changed on just how many cuts we're going to get this year from the Fed?
Not officially. I think September is now much more of a question than we previously thought. We previously were expecting them to stay on hold. Now it's much more of a debate, and it's going to very much rely on the next couple of prints, right? Especially on the inflation front. And then on the employment front as well, we do think that there is the possibility we'll see a decent print for August and then potentially some upward revisions for June. So a lot of the reason for the downward revisions were specifically related to the June number. May was driven by the seasonal adjustment, so sort of mathematically driven because June was so much revised down. So we might actually see the mechanical reversal of that, in which case June might get revised up a little bit, in which case we might be heading to the September meeting and things look a little bit more rosy than they had been.
How much of that also could just be about post-Liberation Day fallout, that we have these couple of months where hiring wasn't happened, you get some of the data in, you get some of the tariff rates in, and then you get a bounce back late in the summer?
Yeah, I think that's part of it too. When you're thinking about what happened in June, we were sitting here in an environment where we had extreme tariffs on China. There was a lot of uncertainty around where the direction of travel was. And by the way, 500,000 people lost their work authorization from May to June. So it kind of made a lot of sense. We were all thinking here at the start of the summer, when are we going to see a material downshift in the labor market? And June was a period that we were quite worried about. So now the labor market kind of makes a lot more sense. And back in June, things were looking a lot more dicey. As we move throughout the course of the summer, the backdrop should look a lot better.
But how much, though, is the Fed going to be pushed, not just by the politics of the moment, but now a market that's pricing in something like 90% odds? You're starting to see the language creep in. Mentioned from Mary Daly, John Williams talking about fine-tuning policy. Is this a Fed that necessarily needs to now, in more earnest, consider cutting in September because of all of that?
If the meeting was tomorrow, I think it would make a lot more sense. I don't think they want to push against the 90% odds. However, this could be a long couple of weeks as we get some additional data. It's very possible that the odds will, shift down towards, 50% or less if we start to get inflation that comes in quite a bit hotter, which is our expectation. So the next couple of prints, we could start to see more impact from tariffs. And then on the services side, which has been holding down inflation in the past couple of months, that might go in the other way, specifically as it relates to travel.
Stephanie, I wish that this is all we could worry about. But unfortunately, there's so much of other things going on. Among them, I don't know what order we tackle things in, but starting with Kugler and her resigning, I was speaking with Bill Dudley yesterday, who basically said, look, the institution, the Fed, is strong enough. Even if you get an outright political appointment, it doesn't make a difference. It's a committee. Is that your view, too, at this point?
Yes, definitely. It is a committee. Two potential nominees from Trump in the next couple months. Yeah, it's not going to swing the committee that much. We actually ran an exercise to say, okay, let's say we take these two members, we make them way more dovish than any member out there. It still doesn't change the median dot. So it very much depends on the broad group of members. And if they see that the data is deteriorating, of course they're going to cut. But I don't think they're going to do it for political reasons.
Though if you do have, you get Kugler's replacement. Let's say Chair Powell decides to step down and leave the Board of Governors as well, leave the FOMC. That means in total you have 4 Trump appointees because you add that to Williams and Bowman. Does that just in general shift them much more dovish and maybe give a chair who's more dovish to more ammo to guide the entire FOMC in that direction?
Well, I think Williams is very much going to depend on the path of data.
Okay.
You'll have Waller and Bowman, who are currently coming out as a lot more dovish, and then you'll have the 2 next appointees. So you still have 4. So I think it could move the FOMC in a slightly more dovish direction, but we're talking 1 to 2 additional cuts than maybe would otherwise be the case. We're not going to get something like hundreds of basis points that are unwarranted.
Stephanie, I would also love your very measured thoughts on the data freakout and the reliability of the data. Ray Dalio putting on X yesterday saying that the head of the BLS should have been fired, that there is an issue with the data. Is the data reliable? Is there an issue? And how concerned are you if we get a political appointment to the head of the BLS?
The data reliability is not an issue for the reasons that have been put out there. Of course, there are large revisions. Part of that has to do with low response rates recently. But certainly it's not related to any sort of fraud that's happening at the institution. If we do get a political appointee to the head of the BLS, I do not expect that will change the data. It is a very well-respected, very thorough survey. There are hundreds of economists there. So I don't expect to sort of question the reliability of the data. We do have to live in an environment where, because there are such significant swings out of Washington, that is driving a lot of the revisions out of the data. That's the one reason why we have such revisions to the May and June print. It's because the payroll processors, which is what drives kind of the first print, had to have a lot of revisions to that, a lot of corrections, largely because the environment was changing so much. So it's a function of the environment and not the reliability of the data.
Stephanie, this has felt like much needed therapy. Thank you so much for joining this morning. We really appreciate your time. That's Stephanie Roth of Wolfe Research. Okay, coming up, Texas Governor Abbott brings down the hammer on Democrats. His response to state lawmakers leaving to block a controversial vote. We're going to discuss that next. This is Bloomberg. This is Bloomberg Brief. I'm Danny Berger in New York. So President Trump has said he would be substantially raising the tariff on India exports to the U.S. over India's purchases of Russian oil. India's Ministry of External Affairs says the nation will take all necessary measures, adding that, quote, the targeting of India is unjustified and unreasonable. Back with us is Bloomberg's Suzanne Lynch. Suzanne, to what degree does this demonstrate that the tariff tensions are not yet over?
It certainly does. I mean, this is a further escalation by Donald Trump against India. Obviously, India was surprised to get that higher tariff last week. Now it's been faced with the threat of further tariffs over what Donald Trump is casting as their support for Russia. Now, it's an interesting geopolitical aspect to this. Donald Trump seems to be getting increasingly frustrated with Vladimir Putin and Russia and calling out countries who are helping Russia in some way. And really, that's chiming with what we're happening in Europe. Just in the last couple of weeks, Europe sanctioned a refinery in India over its use and sale of Russian energy. And similarly, it targeted 2 Chinese banks over what it says was these banks help for Russia when it comes to its war in Ukraine. So maybe there's an interesting symmetry coming along here. But nonetheless, it just goes to show that there's no line drawn under this tariff war by Donald Trump. A lot of countries feel that this battle isn't over. India, as you said there, has rejected this as unjustified, is hoping to get more favourable treatment. So let's see how that plays out in the next couple of days.
A lot of nations hoping for things to play out in their favor, including Canada and Switzerland. Meanwhile, Suzanne, the midterms are squarely still in focus, especially with the controversy over Texas looking at redrawing the map in a way that would help them, the Republicans rather, for the midterm. Let's just listen to some of what the lawmakers had to say over this as Democrats flee to try to avoid the vote.
The tool they're using is a racist, gerrymandered map. A map that seeks to use racial lines to divide hard-working communities who have spent decades building up their power and strengthening their voices. And Governor Abbott is doing this in submission to Donald Trump.
To those who are absent, return now. Show the courage to face the issues you were elected to solve. Come back and fulfill your duty, because this House will not sit quietly while you obstruct the work of the people. The people of Texas are watching, and so is the nation. And if you choose to continue down this road, you should know there will be consequences.
And Suzanne, Governor Abbott also writing in after this, basically just saying that the Texas House Democrats have abandoned their duty. Suzanne, what are the stakes exactly here? And how does this even unfold? I'm not quite sure how Texas arrests someone for the act of just simply leaving the state.
Yeah, I suppose the first thing to say is, in one sense, this is nothing new, in that both Republicans and Democrats over the last decade or more have been accused of redrawing electoral boundaries to serve their own political purposes. Now, in this specific case, Governor Abbott has recalled the state legislature in Texas, which, by the way, does not meet that often. But this is an emergency session that is due to expire on August 19th. And at issue are 5 seats that Republicans hope that they can switch from Democrat to Republican. And the way the boundaries will be drawn in some of these seats is that they will kind of conflate areas that are very strongly Democratic. So they will kind of push all those Democratic votes into one constituency rather than further out across the state. And this is a tactic, as I said, has been used for some time by both sides, very controversially. What's happened now, though, is that these Democratic lawmakers left the state, depriving the House in Texas of a quorum. Now, Governor Abbott has issued civil warrants, arrest warrants for these lawmakers. Now, a lot of legal experts saying that these don't carry weight, particularly outside the state. Let's see how this plays out. A lot of these Democratic lawmakers are very defiant. Some are saying they've made arrangements for their kids to be picked up, that they're going to stay outside Texas for the foreseeable future. We do believe that the House will reconvene later today. So let's see what the next steps are. But look, as you said there, this is all about the midterm elections. We're obviously more than a year away from those, but Donald Trump and the Republican Party have their eyes focused on these. This will be the first opportunity for the country, for voters in places like Texas, to give their verdict on the first half of Donald Trump's term as president and Republican control of both houses of Congress in Washington. So we can really see that political environment coming into focus here.
Suzanne, thank you very much for those updates. That is Bloomberg's Suzanne Lynch. Now, one stock we are keeping an eye on this morning is Palantir. Shares extending gains this morning, up more than 5%. Palantir reported an eye-watering 48% surge in revenue for the second quarter to over $1 billion. CEO Alex Karp writing in a statement, quote, "This was a phenomenal quarter. We continue to see the astonishing impact of AI leverage." Joining us now for all things chip is Bloomberg's Oliver Crook. Oliver, what drove these earnings?
Yeah, so listen, you look at Palantir, you look at what you got out of Infineon. What I like about both of these stocks and both of these earnings stories is that you're getting actually concrete figures in terms of what the AI impact is. For Palantir, as you said, revenue up 48%, crossing over $1 billion this quarter. They've also raised their long-term projection for the year to $4.15 billion. That's up from $3.9 billion. So that's a very concrete impact of where we're seeing it actually hit the bottom line for that company. Similarly for Infineon, despite the fact you had a slight miss on revenue, margins did a lot better than had been anticipated. And what investors are focusing on today, and the stock was up 5 or 6% a little bit earlier, is the AI impact. When I spoke to the CFO a little bit earlier, he told me that revenue for the rest of the year on the AI and data side of the business is going to double, and it may nearly double again next year. So again, getting some actual concrete numbers for the sort of euphoria around the AI trade.
Yeah, and AMD, some of the other U.S. chip makers rallying in the pre-market, maybe in sympathy with Infineon. Oliver, we also have the U.S., speaking of chips, exploring location trackers for AI chips. That was according to an official speaking to Bloomberg. Oliver, this seems like a very complicated and difficult task to do. What is the administration looking at? How would this actually work?
Yeah, so Danny, I actually have no idea, which is why I asked the Infineon CFO about it a little bit earlier when I spoke to him and saying, listen, has there been a conversation with the Trump administration? And are you actually physically able to do this? Have a listen to what the CFO had to say to me a little earlier today.
We are part of these conversations, but please understand that I cannot go into details and share these at this moment in time.
Is it possible, I guess is the question, rather than the actual conversation, is it possible to do that? How feasible is that demand or that request?
I think it's always possible to do something. The question is, how long will a certain advantage last, and how quickly will others then cope with these technologies or have countermeasures in place? I think that's still out for discussion.
So, Danny, clearly they're involved in these conversations, saying that it's actually physically possible to do. What I think is very interesting for a company like Infineon, most of their chips, 56% of their revenue, are chips that go into automobiles, goes in, generally speaking, to electric vehicles. Where are electric vehicles sold? In China. We create a situation here where in order to please the United States, you need to start putting these things into chips. That might upset China. That could squeeze a company like Infineon that, again, is trying to play both sides. These are just some of the other sort of geopolitical risks we need to be thinking about when thinking about semiconductors and the AI trade more broadly.
Oliver, thank you so much, and an excellent conversation with Infineon. I recommend everyone give that a listen on Bloomberg.com or on the terminal. Bloomberg's Oliver Crook there. Now to oil, shares are rising, but the pressure is on at BP. The British oil major's new chairman is going to review the firm's entire portfolio, looking for costs to cut as activists continue to push for a turnaround. BP CEO told Bloomberg earlier that demand remains strong.
Demand remains pretty robust, if I'm honest, despite all the headlines. 1% growth in demand over the past 20 years or so. 2025 looks like 1% demand growth. 2026 looks like 1% demand growth to us from different sectors, from petchems in 26. But demand growth continues to be strong for the product.
Joining us is senior editor for energy and commodities, James Herron. James, what was your takeaway from BP?
Well, BP showed some progress. It's obviously got to improve its operational performance to satisfy activist investors and turn around years of underperformance. It had some signs of that. The new chairman is in place now, and he's going to take another look at BP's whole business. So maybe there's potential for some more dramatic change there. But share prices reacted positively today, and they have a lot of numbers to point to, such as cash flow, earnings beating estimates, more reliable assets to show that they're making operational improvements.
Meanwhile, we got Aramco earnings as well, where profits fell for a 10th quarter. James, what did we hear from Aramco as it pertains to the demand and oil outlook?
The Aramco CEO also talked bullishly about demand. But the fact is that demand is only part of the equation here, and supply growth is still pretty strong, at least until sort of the middle of next year. And a lot of estimates expect there to be a surplus of oil, especially in the second half, because OPEC has just added, we're in the process of adding about 2 million barrels a day. Supply is growing elsewhere. And so we may see some weakness in oil markets later in the year and the beginning of next year if these predictions of a surplus come true. So the pressure is still on these companies.
Okay, will be interesting to see how that evolves. Oil has been falling in recent days after that OPEC decision. James, thank you very much. That is Bloomberg's James Herron. Now, coming up, we're going to get you set up for your trading day. We're going to have more earnings out, including that of Pfizer and AMD, SMCI. We're also going to have more data on deck. We'll cover all of that for you, your trading diary. That's up next. You're watching Bloomberg Brief. You're watching Bloomberg Brief. I'm Danny Berger in New York. Let's get you set up for your trading day on this Tuesday. So we're going to have a lot of earnings. Pfizer and Caterpillar, both of those will be reporting results before the bell. Caterpillar, once known as a bellwether, is it still really? We're also going to get some data, U.S. trade balance. That's at 8:30 a.m. Eastern, followed by PMIs at 9:45 and 10 a.m. Then we're going to have some earnings after the bell. Those include AMD, some other chip makers, Snap, all those report earnings after the market close. And by the way, those AMD shares are rising ahead of those earnings that come out after the bell. Also, a strong set of results over in Europe from Infineon. So we're seeing AMD, some of the other chip makers in the U.S. rise in sympathy, those up 1.6%. Palantir off to the races this morning, up nearly 5.5%. It delivered a knockout quarter. The CEO called the astonishing impact of AI behind those results. Meanwhile, Vertex Pharmaceuticals, a rough morning for them, down 14.3%. The FDA said that they didn't see a path forward for broad use of its pill in treating chronic pain conditions. Meanwhile, let's take a look at your bond market this morning, because we are seeing some easing of the gains that we saw both on Monday and Friday, those being driven by the poor payrolls report that we saw. We're speaking with Stephanie Roth of Wolfe Research earlier, who said that the data certainly puts September in play. That seems to be like what we're getting from Fed officials. Williams saying some fine-tuning might be necessary. Mary Daly saying to Reuters that we could see more than 2 cuts this year. 10-year yields down by 1 basis point, nearly 2. We're at 421 flat. Your 2-year yield that rises more, up 2.4 basis points at 369. All right, that is it for your brief. Surveillance will take things from here. Watching Bloomberg TV.